What's going on, everyone? This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. In this video, we're going to be talking about Bitcoin. Specifically, I'm going to be taking a look and sharing my thoughts, focusing on the technicals about whether or not it is likely or not Bitcoin over the next week or so comes back and tests the recent lows, or if it's likely that a bottom is being put in. I want to start this off, first of all, by saying if you enjoy the content, please go ahead and make sure you hit the like button, subscribe to the channel, and most of all, if you have any thoughts and or opinions that you would like to add, please share them in the discussion below. I want to start off zooming really far in to a very small time frame, and just to give you a little bit of a clearer insight to what's taking place right now. And you can see this trend line over here signaling that perhaps we are indeed looking at an inverse head and shoulders taking place off the lows. Price currently breaking out right over here right now and is looking, after coming in for that retest of that broken trend line, breakout, retest, to see whether or not it's going to resume off, get above this last bit of local resistance, and then perhaps being targeting. We'll look at that in 1 second. Before we do, I want to first of all show you where the stop loss would be on some type of trade like this. I want to emphasize right now that you should be neutral in the market. You should neither have any type of bullish or bearish bias. And you can see right now the market is currently sideways. And that should be your bias as well until we get any type of momentum to the upside and or downside. Nevertheless, I want to focus in right now and show you on this breakout over here. If you did have a very short time preference, you can see this is off the 2-hour time frame right now, where your stop loss would be. And that would be over the last 24 hours where price was able to go ahead and establish support. You could see a couple of different things. You could see after the weekend. Interesting to note, by the way, that over the weekend, last weekend, as price broke down from $20,000 towards $17,500, price did open up on Monday, kind of where it left off on Friday, during that low volume over the weekend, seeing that capitulation take place. There was no follow through on that yet. What would open up the door for a likely retest of the lows? Since then, you saw price go ahead and establish support over here. You can see these two touches initially, and then price came up and then back down again. And then yesterday, establishing support in that area of 17,300. Now, that area of 17,300 is quite significant, and it's significant because if you viewed price piercing below, and you could see over the weekend price pierced below the previous cycle all-time high, then it's also equally as significant that price has not been able to hold below the previous all-time highs. We have not seen a weekly close below there. That's equally and perhaps even more telling and or significant. But if you take a look at where this line is, and if you read over here on the right, it says 19,730. Very interesting over here that it's 19,730, that previous cycle all-time high, where price, after piercing below it, has gone ahead and established itself as support. And what that means to me, and what that should mean to you, that as long as price is above that current support, you see that support being established, you have the context that that's also the previous cycle all-time high. And as long as price is above it, it's likely that the low is in, at least for now. Now, if price were to go ahead at any point in time, trade below this level, it would be highly likely that price is at least on a trajectory to retest that last low, 17,500 area, or even take it out. But until that happens, and as long as this support continues to hold, more than likely we are looking at here a breakout developing, a breakout of a reverse head and shoulders, and it's targeting probably somewhere along the lines of, let's call it 25,000, 26,000 into the area of next resistance. I want to take a look at that resistance with you really quick. Let me just jump over to the 8-hour time frame and zoom in. I'm looking at this in log scale. I look at both linear and log all the time. You can see over here, I am over on log. and I have the same trend lines in, and I'm watching them in the areas that they might offer potential resistance. As of right now, it's you could see him follow my mouse to the left, the crosshairs. You could see the Luna low over here, and you could see in this area over here, this trend line. That would be the first area of resistance. Now, that is 25% off the low. You can see that area is coming in roughly, 50% off of the low. Now, I want you to remember that 50% move into the next resistance, roughly 50%, something that I'm going to show you in just a moment. It's really going to help give you some type of reference at potentially what is developing. Right now, we're looking at approximately just under a 25% move off of the low. And I also want you to remember that number as well, because again, that's something that's going to provide some pretty good reference for you right now. And what I want to do next is I want to look at the previous cycles lined up as if April were the all-time high, because structurally it is, whether you're looking at almost any on-chain indication, whether you're looking at the FOMO that took place in that period, or whether you're looking at some traditional indicators such as the RSI, all of them point towards structurally the top, even though price made a higher high in November. It did occur in April. And just lining up these previous cycles, you could see that, you know what, it is around this time that they all have put in their capitulation low. What's also interesting, and I just want to give you this view over here, you could see that it was 65 days, right? From 65 days until that low was put in, price came off 52%. That was the capitulation we saw in 2014. In 2018, again, 65 days into that bottom capitulation low, price came off again 50%. And we are seeing similar behavior. We're seeing in the last 65 days, again, price coming off 52%. Now, that in itself is nothing to suggest that a near-term bottom is being put in. Because if you understand right now that everyone acknowledges that, you know what, this time is different, and it's different largely because the Federal Reserve, they're tightening into a slowing economy, and they're doing it because of inflation. If you go ahead, and I'll put the Twitter link into the description below, but if you look through my feed, I've put out all week important threads showing in real time how that we're looking at all the things that were causing the last high inflation print. Last month CPI was very hot in both food and energy, and we've seen over the past few weeks both food and energy tumbling down substantially. This is potentially setting up what looks like a coming Fed pivot. And when I say Fed pivot, I mean that the Fed right now is raising rates, and it looks like as early as the third quarter that they're going to move to pausing their rate hikes. That should send risk into rallying, and the market right now is picking up at that right around the same time that we are looking at potentially also a capitulation occur on Bitcoin. And now I want to continue and just show you and give you a little bit more reference from that capitulation low back here in 2015. Price spiked up about 50%. Now, if you remember, 50% is the level that I gave into the next heavy resistance. It's roughly 50% away. So that's interesting in itself. And then I want to go a little bit further with you and just see what happened in that last cycle. And price bounced up, in this case, about 25%. That's roughly where we have bounced so far, about 25% off the lows. So from, not that what we're doing is looking at past bottoming behavior. We're not trying to suggest that because price bottomed in similar fashion in any of the previous bottoms that it will do so again. A lot of people look towards this behavior over here, and they're really hoping to see like price come down and then move up in a V. That's not usually what happens during bottom behavior. The reason this happened, if you remember, was because the Fed came in over here. They cut rates down to zero really quickly, and then they massively expanded their balance sheet and started quantitative easing programs. That's not the current situation that appears to be developing right now. What appears to be developing is that over the next, let's call it 2 to 3 months, that data really matters, that the Federal Reserve, that traders, market participants are really going to be paying close attention to, first of all, the price of things like oil. They're going to be paying attention to the price of all commodities to get a feel, to get a read on whether or not the Federal Reserve will indeed be looking to pause rate hikes. If they pause rate hikes, somewhere around September, October, that should set off a significant risk rally. Generally, the way that bottoms look like or work is not a V-type behavior that we saw during March 2020, which a lot of people would really love, but it's more along the lines of capitulation, some type of bounce, a retesting, a leveling out, and price could generally go sideways for quite a while before getting its feel. The same thing could be happening right now. We've seen price, potentially put in a bottom. And if it did, we're looking for that bounce. Now that bounce could stop right around where it is right now. And then we could be testing either that level that we pointed out, 19,300, or even breaking below it. If we break below it, then there's a strong chance that these lows will be tested again and maybe even broken. But as long as that's holding, more than likely or not, we're going to see some follow through. The reason being is because right now, again, the macro is really aligning to where everyone is realizing that it looks like the Fed is actually going to be pausing. And then you're going to see front running of that activity. And right now, why it's too soon to say that risk is on, you are seeing a very big pivot in the market leading to that type of behavior to really develop soon. That's why each and every day we're really focused right now on the data and we're watching what's happening on the charts and we're putting it all together with that fundamentals to try to line everything up. So let me just go back to those charts and explain a little bit further with you, just so everyone has a really good read on the current levels. Again, as long as we're above this support that has been put in over the retested and held over the last 24 hours, really established, and you can see it's been established all week. When I go down to the 2 hour, you get a better read on it. First touch, second touch, now the third touch, and that line has been established as support. As long as we're above it, and as we're breaking out from this inverse head and shoulders, it looks likely that price is headed towards right now $25,000 area. We're going to run into some resistance in that area. And then I'm really curious to see whether or not anyone who is bearish on the markets, anyone who is perhaps a little late in pivoting their bias, and whether or not they're going to go ahead and put up a fight, and what type of fight the sellers are able to put in along the lines over there. Now, if the market rolls over and price rolls over this weekend, and there still are lots of contagion risks out there from a lot of these leverage funds we're seeing blowing up, and the possibility remains. I want you to be hyper cautious, err on the side of caution. Watch out if we break below this level. That's saying to myself, to all of you, we could be and should be retesting these lows, and they could very well give out. And at that point, we'll have to take it from there. But until that happens, it looks like right now that, as someone who really loves looking at the charts, focusing on the technicals, not only that, the technicals here are suggesting that we are potentially putting in a bottom and getting ready for some type of rally. Where that goes, we have to watch where the resistance is, to watch what happens into that resistance. If that resistance breaks, that's 50% off the lows. My friends, that's a long time to be on the wrong side of the market. People could say that from the upside, right? Anyone who held from 69,000 to 35,000, that's a long time to be on the wrong side of the market. Even more so from the break of 35,000 all the way to the low of 17,500. It's the same mentality on the upside. It's a long time to be on the wrong side of the market if you're seeing price have a 50% move. And if that breaks, and then again, we move towards the next area of resistance, and you're seeing price trading somewhere around, let's call it 32,000, you're looking at price 85% off the lows. From the all-time high to where we are, we're looking at a 74% drawdown. If you got the top tick to the bottom tick, that's a 74% drawdown. Lots of people, very rightfully so, adamant, that's a long time to be on the wrong side of the market. that same type of mentality and premise holds on the upside. Right now, if you are following the technicals, you have to look at a potential bottom being put in. If you are following the macro, you have to look at what's being priced in, and that is the Fed pivoting to a rate hiking pause coming up. Usually, when the Fed pauses rate hikes, you see a rally in risk. Now, it's not over from there. It's not over from there. At the same time, the market right now is beginning to price in the Fed getting ready to actually cut rates as soon as December 2022. Now, when that happens, as the Fed begins to cut rates, sometimes you get an extension of that risk rally. But the reason they're cutting rates is because the fundamentals of the economy are not looking good. They're deteriorating. And at that point, that's when I'm going to get really concerned. And that's when I'm going to get really protective. Because if the Fed starts cutting rates quickly, that's when things get really nasty out there. That's when they're getting ready to go ahead and cut rates down to zero so that they could what? They could move back towards balance sheet expansion, so they could go ahead and restart quantitative easing programs. And they'll be doing that because things are not looking good. So why right now everyone has a very defensive and bearish posture? Let's not forget the reason they do was because the Fed was tightening into a slowing economy because of inflation. If all of a sudden that changes and we see that the Fed is no longer tightening into that slowing economy, I want you to be able to make that turn and make that adjustment as well. I don't think it's straight down, and I don't think it's straight down to straight up. I think for the foreseeable future, we have to make sure that we stay on the right side of the market. If you're not yet already subscribed to the channel, go ahead and do so, and we'll do it together. Thanks for watching, everyone. Have a wonderful day, and I'll talk to you soon.